Hello everyone, welcome back to the channel. As you all know, I do quite a bit of trading, and in my last video I covered the S&P 500 and my market outlook there, and that video got pretty good feedback, so I thought I'd do another video based on crypto and Bitcoin specifically. So today I'm going to go over my macro outlooks on Bitcoin, and because it's always important to stay balanced in the markets and see what possibilities are out there, I'm going to share two bull cases with you, as well as one potential bear case. Alright, so let's jump into it. The first thing I want to share with you guys are a couple of charts that I made at the beginning of this year during the March crash. So this is my TradingView account. If you're not familiar, on TradingView you can create and share charts. These charts that I create and that I publish cannot be modified after the fact. So anything you see here is legitimate. I had to post it at that time and I had no foreknowledge of what would happen in the markets. Of course, I did make my predictions, and in these cases, the predictions were pretty good. So let's go into the first one. So on March 19th, I posted this chart. We had basically come down here and made the low in Bitcoin and in the stock market. This was around $3,900. And from there, we had a strong bounce. And then we're forming this pattern here, which looked like an inverted head and shoulders to me. And to me, that really signaled the bottom of the markets for a number of different reasons. And I'm going to go over that in the other chart, in the second chart after this, because it gives you kind of a larger view on what's going on here. But I did see this inverted head and shoulders, and that was basically what I thought as the launching point for the new bull run in Bitcoin. That's why I call this the BTC launch plan. Unfortunately, I can't play this chart because TradingView just doesn't keep 30-minute candles this far back. So if I play it, you'll see can't play it, unfortunately. But I do have this longer-term chart, and this one does work. So let's go into it here. There's a couple of things that I want to show you. The first thing is why I was comfortable calling the bottom in the crypto market here, despite having this very hard sell-off. So the first thing I noticed during the sell-off was the high volume. And you'll note that in general in crypto, and actually in all markets, you're going to have high volume that coincides with market tops and bottoms. Here we topped at the end of 2017. You can see all this volume here. Here we bottomed at the end of 2018 with high volume. Here again we did an intermediate top in July with high volume, and again in March we had this high volume. So high volume to me signals capitulation, and capitulation is basically the culmination of all sellers selling or all buyers buying. In the bearish case where everyone's selling, everyone is sure that the market is going to continue to go lower. They've already suffered through losses and they can't bear to hold on to their positions anymore. So they dump, they sell whatever they have, and that means when all the sellers are gone, basic supply and demand, the market has no more sellers and the price can actually change trend. And in the bull case, the same thing happens, but just in reverse, where all buyers that want to buy, they're FOMOing in. They can't stand to see the market go higher without them, so they just buy whatever they can at the top. And when there are no more buyers, as we know, price will reverse as well. Now, in addition to volume, I also saw some other things on the chart that made me confident in calling the bottom here. And the first piece of that coincides with this corrective action here. Since the top of December 2017 to the low at the end of December 2018, we put in this structure here where we had a sharp down, sideways correction, and then another sharp down. And what I noticed is that this consolidation here resembles a triangle. And if we look on this bigger chart, we can draw out this triangle, and I can label it here. So this would be the beginning of wave A. This would be wave B, C, D, and E. Now this looks to be a little bit of an irregular triangle because B doesn't really go as far as it should, C kind of misses the mark on this trend line, and E itself could be considered a triangle as well. So if we label it this way, A, B, C, D, E, you can see that this E wave, this larger E wave, could actually be a triangle. However, Elliott Wave does allow for another triangle in the E wave of a larger triangle. So although this triangle is a little bit irregular, it is still a valid triangle by Elliott Wave standards. But the important thing to note here is that although price isn't perfect, it does resemble a triangle very strongly. And if I take a look at volume, you also see the required ascending volume. So for me, if it looks kind of like a triangle and it has volume like a triangle, then most likely it is some type of triangle. And if you know from Elliott Wave, triangles can either appear in wave 4 of an impulse or wave B of a correction. And in this case, we had this big sharp move down, this sideways correction, and another sharp move down. And to me, that cemented this being a triangle in the B wave and calling that the end of some type of larger correction. And knowing that we had this potentially completed correction here from the top in 2017, I was looking for a reversal. And that's basically what we got. At the end of December 2018, price reversed sharply and we started a new bull run. And the way I would label this based on Elliott Wave guidelines and channeling structures is to call this 1, 2, 3, 4 with a big extended fifth wave, which Bitcoin likes to do. So at this point we have a big correction, an ABC, followed by an impulse, which is a change in trend. And what we're looking for after that point was a correction of this impulse, which we got in the form of this corrective structure here, followed by a counter trend rally and a termination of this corrective structure during the March lows. So coming back to this chart, based on the high volume that I had seen, in addition to this corrective structure, this ABC, and then this impulse, I was pretty certain that this March low would be the termination of correction in Bitcoin, and from there we would see higher prices. And that's basically what we saw. If I play this chart, you'll see that price acted according to plan. It moved decisively away from this low, hit this upper trend line, and consolidate around that before breaking out and retesting it from the top. And since then, prices continue to go up. So the question becomes, where are we now? What should we expect in the future? And what should we look out for? So going back to this chart, let's look at the macro structure of Bitcoin now. So we've had this corrective structure here, and it looks like we've now started a new macro bull trend. So we're looking for the completion of this first impulse off the lows in March 2018. And that would look like this. Wave 1 being this impulse, wave 2 being this very steep correction, and the unfolding of wave 3, which would still be happening right now. And the way that we can project wave 3 is to take the wave 1 extension from wave 2 and look for the 1.618, which is the high value target for wave 3. Then we can project the end of wave 4 by doing a retracement of wave 3. And again, we're just going to use the high probability zone of the 0.236 to 0.382 level. So let's set it at 0.382. And now we are looking for the end of wave 5. And the end of wave 5 would be a 1-to-1 wave 5 extension. So based on this projection, we're looking at a wave 3 that ends around $21,000 USD, a wave 4 pullback that ends at around $14,700, and then a wave 5 termination point at around $25,000. However, this is all done using the linear scale, but Bitcoin likes to break out in parabolas. And in that case, a lot of times, the log scale is more appropriate. So if we do the same projection based on log scale, we could see that the wave 3 projection would actually be quite a bit higher at something like $43,000 USD. The wave 4 pullback would therefore be at about $28,000, and the wave 5 extension would therefore be at about $123,000 USD. One thing to note is that these projections are based purely on price, and they don't take into account time frame. So I'm only looking at the textbook Elliott Wave extensions and extrapolating out where we might see the end of wave 3, 4, and 5 based on the price action of wave 1 and 2. But what I'll be doing over the next couple of months is tracking price action and reevaluating these targets as wave 3 unfolds. So if you're interested in seeing my continued analysis as Bitcoin price unfolds, please subscribe to this channel and like and comment in this video. And please like this video because it lets YouTube know that you like this type of content and it incentivizes me to continue to keep producing it. Okay, so you've seen this pretty sensational projection on Bitcoin price, and they can definitely happen based on Elliott Wave, and they've happened in the past. But let's take a look at where we are right now and what we might have to potentially watch out for. So I'm going to erase the chart here, and I'm going to go ahead and draw this channel in log scale. And if I draw this parallel channel, you'll basically see that we're at the top of this channel right here. So as I said, looking at the bull case, this price action here is an impulse, followed by a correction, followed by what looks to be an impulse as well. In an Elliott Wave, that means that this could be wave 1, wave 2, and the start of wave 3. But there's also one more pattern that this could be an Elliott Wave, and that is a zigzag correction, where this would be an impulse which makes up wave A, a corrective pattern which makes up wave B, and then an impulse which makes up wave C. The other criteria of a zigzag is that wave C is a 1-to-1 extension of wave A. And if I make this extension right here, you would see that wave C exceeds the 1-to-1 extension just by a little bit. So right now what we have is we have price action contained within a channel with a perfect 1-to-1 extension and wave structure that could be construed as a zigzag. So we have to be careful here because until we decisively break above this channel, this could really still be a corrective pattern, basically a zigzag. And if that's the case, then we could be putting in a larger corrective pattern that's still correcting the highs in 2017. And that would be something like either a Elliott Wave combo, a WXY, or a flat. So let's go over that scenario right now. We have a 3-wave followed by another 3-wave, and that qualifies as a flat. So let's draw this as wave A, wave B, and now we're looking for an impulse, which would be wave C. Now we can also verify the structure here to see if this qualifies as a flat. And to qualify for a flat, we need wave B to make at least an 80% retracement of wave A, and we definitely have that. We're past the 85% point here. And in actuality, wave B can actually go further. It can go further by typically about 1.236, which would be a running flat, or it could stop in reverse here. So if we go to this Elliott Wave reference, we can take a look at flats. And we can see that there are two types. There's regular flats, and there's also expanded flats. In a regular flat, wave B doesn't go beyond the start of wave A, but in an expanded flat, wave B can go above the start of wave A. So in this case, we don't really know where wave B is going to end yet. We're looking for this turn. Wave B could go beyond the highs in 2017 and then reverse. But based on this channel here, now would be a good point for B to reverse. And for wave C must be an impulse down, but it can either end at wave A or slightly beyond it, or even slightly before. So what we're looking for in wave C is basically a 5-wave impulse, which is going to terminate this entire corrective pattern. So you can see that currently this is a pretty decisive point. It could either break out of this parallel channel here and continue higher, which would confirm the bull case, or it could reverse from here and put in this C wave, which would also end the correction. But that would mean that we might see actually lower Bitcoin prices beyond the start of wave A, or it could be truncated and we could see wave C end before the termination of wave A. But what we're looking for is a 5-wave move down if this is indeed a larger corrective structure and we're not done correcting this high from 2017 yet. If and when this wave structure comes down, we can then project the end of wave C. But until that happens, it's anyone's guess where wave C might end. And I know that we've just been discussing the bear case, but there's also the bull case, which I mentioned at the beginning of this video. So that's still in play as well. We just have to see what happens at the top of this channel. So if you're not long already from the March lows or during this consolidation area here, then right now is a pretty risky time to enter for any kind of long-term trading or holding. I'm holding on to my investment positions, and I've also been doing a little bit of short-term trading, but I wouldn't be adding to any kind of long-term positions at this price level here. In my book, there's just too many ways that Bitcoin can go right now, and we missed the high probability move already from the lows in March. So this concludes my macro outlook on Bitcoin. I hope you like it. There are two scenarios. We might be still correcting this 2017 move, in which case we might see lower lows, or definitely a large pullback, or we could already be midway through this larger macro bull case, in which case we're going to see higher Bitcoin prices. So I hope you liked this analysis and video. Please subscribe to my channel for more analysis in the future, and let me know what you thought in the comment section below. Thanks, and see you guys next time. Hey everyone, I'm adding another update to this video because I actually filmed the first video a couple days ago, and a lot has happened in Bitcoin. Unfortunately, there's also a lot that was happening in my life, so I wasn't able to post that video. But the video that I created, although not out of date, it's still definitely in play. Some things have happened that are worth noting. So as you saw at the end of that video, we arrived at two cases, either the bull case or the bear case. In the bull case, price will eventually go higher. And in the bear case, we're looking at this channel that you can see here in purple, along with this one-to-one extension of A to C. And you can see that we actually did get a turn in Bitcoin at the top of this channel. It actually went and exceeded the channel a little bit and exceeded the one-to-one extension a little bit, but was then rejected from those levels and is now back inside this channel. So what does that mean for Bitcoin? Well, what it means is that we're still not entirely sure where Bitcoin is in the macro picture, but we definitely do have a point here. So the probability of this being some type of ABC correction, and that this here is actually an impulse instead of just wave 1, 2, and 3, definitely has to go up in the probability books. Now, if we look at this correction right now, we can project where Bitcoin might come down to. And the most probable area for it to come down to is either this 382 area or the 0.618 area. So let me mark that out here. This would be the 382 area. And the second most probable area would be around this 0.618 area, or even a little bit lower to this high volume node. So if we look at this and apply some Elliott Wave retracements, we can identify the high probability areas for where this might come down to if we want to still keep this bullish scenario in play. And that would be at the 382 level. This is very common for a wave 4 retracement, and to this 0.618 level, which is more common for a wave 2 retracement. And the reason why there is this confusion about if this is a wave 4 correction we're looking at or a wave 2 correction we're looking at is because I'm looking at
this prior structure as a single impulse. And I'm looking at this as an impulse because I see something like this, where this is wave 1, wave 2, wave 3, maybe wave 3 is here. This is something like wave 4, and then this is wave 5. So I see this as the start of the impulse, and I'm anchoring this count based on this triangle that I'm seeing here. So what I'm seeing is that this impulse, since we've seen after this sell-off here, is actually the start of a new impulse. And this impulse is either going to be wave C of an A, B, C, or wave 3 of a 1, 2, 3. Now, if this is wave 3, there's additional complexity here as well, because if this is a wave 3 is the wave that most often subdivides. And if that's the case, this could actually be wave 1 of wave 3, or it could just be a wave 3, and we're looking for a wave 4 pullback, and then a wave 5. So there's a lot of things that can go on here. We're going to definitely have to watch and see more price action data, and I'll try and do a more thorough analysis in the future. So I just wanted to provide an update because Bitcoin did have a little bit of a spill between the time that I made this video and posted it.